The aim of the Biotech Growth Trust is to invest in the best investment opportunities in biotechnology worldwide. And we believe that OrbiMed Advisors is uniquely qualified to manage this trust because we are one of the largest investment firms solely dedicated to investing in healthcare. We have a global footprint with headquarters in New York as well as offices in San Francisco, Shanghai, Mumbai, and Israel. And our staff includes professionals with a combination of both business as well as scientific and medical expertise. And we do feel that the scientific expertise in particular is very important for evaluating new drugs in development properly. Lastly, we've been investing in biotech for over 20 years, so we have a long track record of investing successfully in this particular sector. Despite President Trump's repeated statements about lowering drug prices in the United States, we have yet to see any concrete official proposals from his administration on this topic. We continue to believe that nothing dramatic legislatively will occur with regards to drug pricing with a Republican-controlled Congress. And in fact, the Trump administration has taken some steps thus far that are perceived as friendly towards the biopharma industry. For example, Trump has talked about accelerating the approval of new drugs at the FDA. And under the leadership of the new FDA Commissioner, Scott Gottlieb, we have seen some signs of the FDA being more proactive about approving new drugs, including drugs that have less than perfect data sets. In addition, President Trump has recently nominated Alex Azar to become the new head of the Department of Health and Human Services. And it's very interesting to note that this individual used to be a pharmaceutical executive for a number of years and should therefore recognize the value of innovation in the healthcare system. So while we can't be absolutely sure exactly what Trump will do in the future, we do feel that the steps he's taken thus far have actually been fairly friendly for the biotech industry. We do take a global approach towards investing in biotechnology, but the vast majority of our current investments are actually in the United States simply because that is where most of the innovation is happening right now. We do have selected investments in Europe and Asia, and we'll continue to look for interesting opportunities in those geographies. And I would also highlight China as an emerging area of interest because we're starting to see some true innovation occur in that particular country. So we continue to believe that immuno-oncology, orphan diseases, and gene therapy are the most exciting opportunities in biotech right now. In fact, this year we saw the approvals of some new cell-based immuno-oncology treatments for leukemia and lymphoma. And we expect shortly the approval of the very first gene therapy in the United States for a rare genetic eye disorder that causes progressive blindness. We are increasingly seeing treatments based upon novel technologies that are leading to more tailored therapies for patients based upon their particular genetic makeup, and we think that is leading to cures of disease rather than management of symptoms of disease. So it's a very exciting time for innovation in the sector, and the Biotech Growth Trust is invested across the whole gamut of these technologies. M&A continues to be an important driver of share price appreciation in the biotech sector. Large companies are always looking to acquire innovative drugs being developed by smaller biotech companies, and emerging biotechnology companies that do successfully develop a drug usually don't remain independent for very long. Having said that, we've actually been a little bit disappointed by the pace of M&A activity thus far in 2017, and we think that's partly due to the fact that there's some uncertainty about the level of corporate tax rates going forward. We do expect that upon the enactment of tax reform, M&A activity will accelerate. Corporate tax rates will be lower after corporate tax reform is enacted, and companies that have cash overseas will be able to repatriate that cash at a reduced tax rate back into the United States. That should increase the amount of cash that they have available to make acquisitions, which should be a positive for potential M&A targets in the small and mid-cap biotech space. Despite the recent correction in biotech, we think the fundamentals of the industry remain strong. Valuations are at compelling levels. The FDA regulatory environment remains very favorable towards the approval of new drugs. M&A activity we expect to pick up once tax reform is enacted, and innovation continues to occur, delivering groundbreaking treatments for patients across a number of disease areas. So given this backdrop, we do think that the fundamentals will carry the day over time, leading to strong share price performance, and the Biotech Growth Trust is well positioned to capitalize on these positive trends.